about her. I know in her trading world for a while, Melissa Armo, she's got an amazing energy. Wait till you hear a little bit about her. She knows what she's talking about, and she's helped a ton of people learn how to trade the right way. I invited her today because she has a totally different way of looking at the stock market that I think you guys are going to really enjoy. Melissa's been the founder of Swoosh, a company that teaches people how to trade using a strategy she created calling golden gaps. It's helped find big movers in the market by following where the big money is going, which is similar to what I do. And that's why I like to have her here today. And she's also been, on a ton of shows. She has her own show. She calls it Making a Million with Melissa. She's also been featured on Fox News, CBS, Newsmax, other major networks in the stock markets for experts. So let's give her a nice, great, warm welcome for Melissa Armo. Melissa, are you there?
I'm here. I'm here. Can you hear me?
Oh, perfect. Great, great, great. All right, so Melissa, you could share your screen, and thanks for being here, and the stage is all yours.
Let me know if you can see the screen. Can you see it?
No. Let me stop and share it so you can get control. There you go. Yep, you can see it.
Perfect. Welcome. Thanks so much, Fausto.
Recording in progress.
Yes, I'm in New York City, and we're having rain today and rain tomorrow and rain Friday, and I'm tired of the rain. So if you live in the Northeast, we've had more rain in the month of May than April. So I don't know what's going on with this weather. We certainly need it in Central Park to make everything green, but I'm hoping we get a beautiful sunny Memorial Day weekend. So looking forward to trading this summer. Summer really is a great time to trade the strategy that I trade, which is based on gaps, because I'm looking for fast moves, morning moves in stocks. Like to get in and out very quickly. And I do options as well. And we'll talk about a few options I've done recently in here today. But for the options trades, I'm really not, babysitting them all the time. I put the trade on. I let the trade play out. I'm doing the weekly option. So I will check it. But it's not like I'm sitting at my desk all day between 9:30 and 4 and trading. So it's a nice career if you can learn a system where you can consistently make money in the market. It's a nice career to have all year, I think, but particularly in the summer, because no one wants to be outside when the weather is beautiful and sunny and you can go to the beach and do other things. So today I'm going to talk to you about learning how to short on the side of institutional money and gaps. I trade gaps. And again, if you have questions, you can plop them in the room as we go along. As Fausto said, I appear on TV on every major network. I've been talking a lot this year in 2025 about tariffs. We're going to probably hear a lot of talk about tariffs in the next month or so. I'd say towards the third, fourth week of June, end of June, beginning of July. We could have a lot more volatility coming our way in 2025 because, of course, the pause on the tariffs was put for 90 days out, and that's going to come up in about another month or so. So I think that it's going to be an interesting year to trade. If you've already traded so far this year, you know that. If you have questions, you can always email me after today at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. If I don't answer the phone, I will call you back. I'm a real person. Again, I live in New York City in Manhattan, so I try to get back to people in 24 to 48 hours. So let's talk about trading. Again, it's the official start of summer for Memorial Day this weekend. In fact, Fleet Week starts in Manhattan today. It's launching today. All these naval ships come into New York. It's really neat to see them. You can go tour them, and it lasts a week into Memorial Day. So again, like I was saying, summer is a great time to trade the stock market, specifically trading gaps and fast trades. Now, I like to short. I will go long, but I prefer to short. And one of the reasons I prefer to short is because stocks sell off faster than they rally. And again, if you can trade in the morning, make a couple $1,000s in the morning, be done by 10 o'clock, 10:15, you can have the rest of the day to yourself, which of course, like I said, is good at any time of the year, but especially in the summer. I've been teaching people for about 14 years. I've been trading now for 17, and When I decided to do this, I wanted to do it because I wanted a different career. I wanted a different job. You have to find a way to move into trading as a career and make the money that you want to make before quitting your full-time job if you're working full-time now. I have people with me that are retired, making extra money on the side. Some are working part-time. Some have their own businesses. Some are doing this full-time. You have to make it happen for yourself. If you want to do this, you have to find a way to figure it out and do it. And again, I think when people start to trade, and I was in this camp, I thought I was going to make all this money really quickly in like the first 30 days, and it didn't happen. And then I felt discouraged. And then somewhere along the way, in the first 6 months, I realized it was going to take more work for me than I thought to get where I needed to be. And you might be trading for years and have lost money in the market or paid for classes and not gotten anything out of the classes, and then lost money taking the trades from the classes that you took. The reality is, don't give up. Don't give up. You can make it. It's the path is different for everyone, but no one is born or starts to trade or takes their very first trade and then all of a sudden makes money and never looks back and knows how to do it. That's just not reality. It's not realistic. So you kind of have to make a decision that you want to do this and then take actionable steps to make it happen for you. Whether you want to trade full-time or part-time, like I said, it doesn't matter. Even if you're only going to trade for half an hour a day, you need a strategy and a system that has more winners than losers, or it's going to be very difficult for you to be profitable and continue doing this. And again, there's nothing like making money to motivate you to keep going. Everybody makes money when they take a trade, if it's a bad trade or a good trade, but is it a good trade? When I say good trade, is it a trade that actually you could replicate over and over that you could use? So even people that have bad strategies and don't know what they're doing make money in some trades. It doesn't mean it was a good trade. A good trade to me is something that you can do. You could say, okay, I did this today. I can do this tomorrow and the next day and the next day. I can do it under any market conditions, whether the market's bullish, bearish, whether we have tariffs. I can replicate this particular set strategy and system for the next umpteen years. That's really what you need to find and do, because things change. Things change. We've already seen things change tremendously since the election of 2024, since November. Again, we're pretty much at the six-month mark since the election. Hard to believe, but a hell of a lot has happened since then, particularly in stocks, if you own individual stocks, and also the market. So anyways, like I was saying, you need the right tools to be successful, and you need the right tools to get good results. So I developed a rating system. It's a method. This is the tool that I use every single solitary day to make a decision if I want to take a trade. So I go through a checklist. It's a 26-point checklist. I rate it. I rate the gap, and I'm going to go over what a gap is in a minute. If the rating system tells me if it gets a 20-point or more rating, then I take the gap in the direction of the gap. Okay, so I'm never ever going long a bearish gap, and I'm never shorting a bullish gap. So I'm always looking to do the rating in the direction of the gap, okay? And again, 20 is my cutoff. So this is a very useful tool. Instead of saying, well, this thing's happening and that's thing. Actually, I'm going to talk about UNH. UNH is a good example where if you're trying to trade the news, you're all over the place. Same thing with the QQQs and the SPY with tariffs right now, or even the last month. Like on UNH today, there was the stock gap down today. There was negative news that came out. There was positive news that came out. What do you do? Again, sometimes a story or an article that comes out or something somebody published is done by a company's PR firm. Again, I appear on television. PR firms put out information to try to help the companies. So how do you know whether or not to believe it? And all of these things, a lot of times, are based on opinion. When I make a decision, when I do the rating system, I'm looking at the technical analysis, I'm looking at the price in the stock chart, okay, which we can all pull up the same price at the same quotes, we get the same quotes, we get live data feed, and I'm looking at it and making a determination based on technical analysis. Now, what is technical analysis? Technical analysis is looking at past price data to predict future price data. That's something that you could do. And again, that's something that's real, and we can see the price of things that happened yesterday, last week, last month, and then live time right now today. And actually, here's the UNH. Actually, so this was the chart from yesterday. One of the biggest option shorts we did in the last week was UNH. This was, again, a gap. So let's talk about what is a gap. So when a stock gaps, the closing price at 4 o'clock, whatever the stock is closing at 4 o'clock, again, could be a market ETF, could be the stock. When it opens the next day at 9:30, it opens at a different price. So this was an example of a bearish gap. Again, you also have bullish gaps. I did not play this long, but UNH also had a bullish gap here where it closed at one price at 4 o'clock, opened at a different price at 9:30. In this case, it opened up. In this case, it opened down. So this is a bearish gap. This is a bullish gap. Anyways, long story short, we did this gap here. Okay, this was the first one that we did. This was 513. So it feels like a long time ago actually now, but today's only 21st. But this was the first gap that we did. Again, if you like to read fundamentals, if reading the news, if whatever, if that helps you get conviction to do the trade, fine. I have no problem with that. And sometimes maybe it will. But if the news is the opposite of what's happening in the chart or the rating system, then you got to ignore it. Then you got to ignore it. And again, it's very hard for a lot of people to do that. So I called the 340 puts that expired the 16th. This was tight because I called this trade on the Tuesday, expired on the Friday, the 13th, and it was a great trade. So I call trades a lot of times in the morning before the open. Sometimes I call them on the day, but you would not take this before the open. You can't. You would take it after the open. This was a really nice trade. And again, I'll go back to the chart and show you what happened in a minute. So we were in the 340 puts, okay? So again, cost was $14, which is kind of pricey, but again, I'm going to show beginner risk in a minute. If I did 7 contracts, risk was 9,800. I've been trading, like I said, for a long time. Sold at 80. That was not the high of the options chain, just so you know. I think the high was like we're 90. It didn't quite get to 100, but it was just unbelievable where this went. Profit was 46,200, and it was a 471% return on investment. What if you did 1? Oh shoot, I didn't put the beginner in here. I put the, sorry about that. If you did 1, it cost you 1,400. Sorry about that. I thought I put the beginner in here. If you did 1, it cost you 1,400 and you could have made $6,600. So again, this was a good trade no matter how you sliced it. So we did it here. So I took it, bought it. So I bought the put and then I sold it to exit it. So what am I doing when I'm doing options? I'm trading the gap and I'm trading momentum. Okay. Again, this trade was up actually into the close here, but because it was so expensive, I stayed with it and I did think it was lower. And then it went a little bit here, and then here's the day you want to exit the trade. So again, this did another gap here, closed here, gap down, open, dropped, went all the way down to 250. So this was almost 100 points through the strike. Okay. These are the types of trades that can take a small account and make it a big account very, very quickly. Or again, if you have a big account, it can really help to grow your account. We don't get these trades every day, but we do get them. And so again, this is a great chart because it's a really, really good example of what institutional selling is selling, okay? Because it got dumped. From the day that this opened, the very first day, this was closed here. Again, snug as a bug. We weren't in it yet here. It was around 370 and change. Gap down here actually opened under 340. You could have done a lower strike if you didn't want to pay the $14. And then crashed. Boom, boom, boom. So again, this is momentum. So again, I trade gaps because I'm trying to find momentum because that's how you can make money in the market. It's very, very difficult to make hundreds of thousands of dollars a year if you're trying to scout for 5 cents, 10 cents, 25 cents. You're going to have to take a whopper of a size to do it. It's too much risk for too much size, in my opinion. So every stock we trade, we're trading stocks, again, that you know of, that you've heard of. I'm sure everyone has heard of UNH. So any questions here so far? How are we doing? Okay, so why do I like to short? As I was starting to say, UNH is a great example. It's panic, okay? So panic comes in and it's like that. Again, it's like a car crash. It happens, woo, sometimes like that. It's an emergency. Woo, what happened? Again, it's panic, it's selling. When people panic, like when we saw the sell-off actually in the market, when Trump put the tariffs on, we had that massive sell-off, that was the end of March and the beginning of April, people panicked, okay? People are panicking in the UNH. And then you saw selling. So I'm shorting I'm shorting then and taking advantage of that panic. So one of the reasons why I prefer to short is, again, short moves happen quickly, panic comes in fast. It's not to say that there isn't something called panic buying. Sometimes you get panic buying, but panic buying is very, 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 very rare and almost never happens. Actually, let me see if I can pull this up here. Can you see the SPY here without me moving it back and forth? Can you see my SPY chart? This is the day of the pause day. 4-9. I don't know if anybody remembers this. This you can't even tell unless you watched this here. Like you're like, oh, that's a green bar or whatever. No, this actually on the day that the pause happened with Trump, everyone was screaming on TV, oh my God, we're the biggest rally of our lives. This, you can't even tell unless you watched it that the day didn't really transpire the way that the bar looks. So we actually gapped down on the day to start the day. And then it was doing this. The market only had this whole move at 115. Again, you cannot tell that there looking at the daily chart. But it literally was like Trump came out with the news. It made the spike. It happened in every chart. I could look at 1,000 things. From 115 then until 4 when the market closed, you did have what could be, described, because I'm just trying to give you an example, panic buying. That's very rare. Very, 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 very rare. Almost never happens. May never happen in the market again the rest of the year. But you did have that. Okay, when he dumped the news and tweeted or whatever he did. So this, you can't really tell it because it wasn't like the market opened and went do like a lovely rally. It was like nothing here. Could have fallen off a cliff again, and probably would have, except for at 115, then Trump did the tweet or whatever and paused tariffs, and then it had to move. So that kind of was like panic buying, really. Again, you look at the size of the length of the bar from tip to tail. It was an unusual bar for the market because the market doesn't move $50 usually in one day. So that's an example of panic buying, okay? Anyways, most of the time, though, you have panic selling, just so you know. That's more prevalent. That's something that you can find almost every single day, and that's what I really, like to trade and look for. And again, if you're following the smart money, I call it institutional money. It's whatever you want to call it, professional money. That's the intelligent choice. And in my opinion, in trading, like I said, for 17 years, in fact, it's the only path that will ever lead you to success. While there is lots and lots of chat rooms and lots of meme stocks that are out there and they've popped up in the last 5 to 6 years, the reality is that sometimes you can have a group of traders, retail traders, that can take hold of a stock and move it temporarily. Could be for one day, could be for an hour, could be for 5 minutes, that's it. But for the most of the life of the market, if you want to be successful, and I'm talking about year over year, month over month, week over week, you have to look for what institutional money is doing. That's how you're going to be more consistent with your trades and your wins. Like I said earlier, anybody, anywhere, a bum on the street can take a trade and make money. It doesn't mean he's going to make money consistently. So you can take bad trades and make money. And that's really, honestly, the worst thing that can happen to anybody, because if people take a bad trade and they make money in it, then they have in their head that they associate a positive thinking with it, that they think that it works. But it doesn't work if it's not something that you can use all the time. Again, longevity is extremely important in this industry. And I realized that early on, when I first started trading in 2008, that I had to find something that had a high odds of working. Nothing's 100%. And anyone that tells you that is just, don't believe them. It's not true. I'm a very good trader, and I take trades that lose. But I have more winners than losers. And that's how you move forward and can keep doing it. So, you have to say, okay, let me look at the odds. Like going back to the UNH, like what were the odds that this could have rallied? Not high. That's how I looked at this. So I rated it, followed the system. Again, I have a very useful tool to rate the gap. I said this is high odds to drop, not high odds to rally. Okay, so I shorted it. I did the put, and we did a day trade too. Okay, again, that's how you have to look at it. You have to weigh the odds because there's no 100%. Okay. So again, how do I determine what the smart money is doing? I use my tools. Again, this is a rating system that I invented, but it's based on technical analysis in the gaps. Like I said, sometimes the news will match up with it. And if that helps you, fine. But you should not be taking trades for that reason of the news. Again, because it could trip you up. It could trip you up. Again, all before I remember being on TV and someone was telling people to buy the dip back here in February, and then we crashed. And then I'm sure that hurt a lot of people and took out a lot of people and probably wiped out some people. Again, while the pause that Trump had was not something that anyone could have predicted, and there's things that happen that are unpredictable in the market, the reality is that if you're trying to trade and watch the news and make trades based on that, you're all over the place with this market because we're in an administration that's very active. Trump likes to tweet a lot. And again, Scott Bessent's on TV trying to calm people down. Where the market goes from here, I really don't know. Because if we were going to make new highs, I think we should have done it by now. Could the market still set off? Yes. Could we go up and make new highs? Yes. Right now, it's getting into a holiday week. I'm not sure the market's really going to go anywhere until June. So be very careful if you're in trades looking for the market. I know people love to trade futures. I don't trade futures. Again, one of the reasons I don't trade futures is because I don't think you have enough picks to do. Because you can't trade the market every day and expect to make money. The market doesn't have a good gap every day. Today is a big fat nothing burger, to be honest with you, in the market when I look at the gap. So again, I look for specific stocks because I think there's more picks if I'm trading stocks. Whether I'm doing an option or day trading, I'm going to get more moves, more picks, more trades than just doing the overall market. Here was Apple. We did a put in this. I'm actually going to put in this now. And we did a couple of day trades in this too. So what happened in this recently, stock closed here, gap down, open, dropped, boom, fell. So this was the 19th, this was Monday. So again, what is a gap? A gap could be bullish, could be bearish, but this was an example of a bearish gap because the stock closed here on Friday and opened lower on Monday, fell. Okay. And we shorted it. We did that trade. On Monday we did it, and Tuesday we did it. So let's talk about, again, being a professional trader. I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. That's how I know what to do. So again, I'm trading on the side of institutional money for the momentum moves. Big momentum can equal big money. All of the stocks that I trade are stocks you've heard of, companies you've heard of. You know them. They all have volume. Again, this particular one, UNH, while it's been in the news, anytime that you trade it, it has volume. Again, this has been on top for lots of reasons. Part of it's the DOJ investigation, the Medicare fraud, the man that was killed, remember, in New York, that happened last year. I mean, this has been really, has had a lot of problems. It's going to continue to have a lot of problems. And again, it's something that we've been watching and watching and watching because when you have momentum, that is how you can make money, whether you take 100 shares or one contract or take 1,000 shares or 10,000 shares of something. And again, this is a fun stock to trade, to be honest with you, because it can move 50 points in a day or a week or 30 points. It can move. It's a big mover, okay? Now, here was the trade that we did on the 15th, actually. Stock closed here, gap down. So this is a 1 minute. So I rated it on the daily, and I said, this is a high odds it's going to sell off again. So we did it. Entry was 275.10. Again, this is a margin trade. So I run a live trading room every day. You have to be able to short the trade on margin, or you could have bought the put. We were already in the puts. Anyways, entry was 275.10, dropped, boom. Exit was 270.20. This was a really, 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 really nice trade. Again, I want to show you that it kept going. This came all the way down here. I could have held this all the way down to 2. I could have held this for 20 more points. On the day I did it, the day trade. Again, I was ready in the put. So I think it's easier to hold options. There's not much wiggles and jiggles than it is to hold day trades. And again, when I say day trade, I'm shorting it on margin. You have to have a margin account, or you can open up a prop account. And I have to be in and out of it before 4 o'clock, between 9:30 and 4. So I got out of it quick. Boom, done, out. But I want to show you here this kept going. And again, the put paid. The put paid. Now, again, you could have done 100 shares, could have done 1,000 shares, you could have done more than 2,000, okay? But like I said, how did I determine that UNH was going to fall? Did I know anything about the DOJ investigation? No, I did not. I knew nothing about it. Not that it would have had any effect on my choice to take the trade. I used the tool of the rating system that I developed each morning to determine what stock to trade and when. It is a very useful tool in any market, but particularly in this type of market. It also can help you decide if you should exit a long. It's a very useful tool. It takes the guesswork out of your trading, okay? Because again, you could be questioning yourself all the time if you're guessing. And so it's really difficult if you're in and out trying to decide, do you have conviction, do you not have conviction? It's so hard for people sometimes to try to just, put their really money on the line and say, I believe in this come hell or high water, even if it moves against me first, I'm going to stay with it. That's why I ended up developing the rating system, because I'm like, okay, if it rates 22 points or whatever, then that's how I go at it. And then I let it ride. I put the stop in for my day trades, I take the risk for the option, and I will hold a trade into the last day if it never goes right, to give it a chance even in the last day if I'm in it. Again, I was talking about this earlier about news and also fundamentals. It's very similar. Again, the Fed is going to talk again in June. They've been having, different people have been speaking even this week. If you're trying to predict what the Fed's going to do, again, we're not psychics. You're not going to be able to do that. And even if you could, you wouldn't be able to predict how the market's going to react. Some people are saying we're in a recession. Some people are saying we're going to go into a recession. Some people say there's no chance we're going to go into a recession. The economy is too strong. But again, what does that have to do with your positions? You have to make the trading choices based on looking at the price action in the chart. And then if something happens after the fact when you're in the trade to help you, great. Because again, trying to predict the reactions or what people are going to do with the Fed is impossible. It's just, again, whether it's fundamentals, whether it's news, whether it's the Fed, don't. And I'm sure there's a lot of people that do trade like that are still trading like that, and that are back and forth with this whole year. Again, right now they're trying to pass the spending bill, and they say now it's not going to pass the vote today. But again, will it, won't it? How will the market react? You have to look at what you're doing and say, I want to do something that doesn't have anything to do with this, so that I'm not affected by it. Because it could affect you negatively, is the point. And it can get in your head. It can get in your head. Any questions here so far? We're doing good? Okay. Next thing is AMAT. AMAT. This was another bearish gap. Stock closed here, gap down, open, dropped. This was actually earnings. This was Friday the 16th. So stock closed up here around 175, gap down here around 169, open, fell. Again, a nice flush. Again, nice selling came into this. So again, there's gaps almost every day. We're still at the tail end of earnings season. We have some things. I didn't look what's Thursday and Friday. We have some things this week. I do gaps for earnings. I do gaps for, could be the news gap, could be a sector gap, could be a gap with the market. Again, the news could cause the gap, but I'm not taking it because of that. I'm rating it based on the price action in the chart. Because again, the news could cause the gap, but that's not why I'm going to take it, okay? And then also, how would you be able to know the direction based on that? You can't look at that, because lots of times, actually, when I'm doing earnings, you could have a good earnings, you could have a fabulous earnings, and the stock tanks, gaps down, and falls off a cliff. So it's not even like you could even say that. You're saying, oh, it's good earnings, it's going to rally. No, it could tank, okay? And lots of times people want to buy gaps for gap fills, and that does not have any consistency either. So why sometimes something will work, where you can say, oh, it filled the gap. It doesn't consistently work as a way to make money, okay? Do I use a VIX? No. But again, if that helps you, it's fine. I can see the volatility in the stocks I trade and the market. I mean, today, since we're talking about this, we may as well talk about this. this morning. This was insane. So I don't need to look at the VIX to see anything with the market, to see what's going on in this thing. Again, this gap down this morning. I'm in UNH's gap down today. Then again, like I said, the spokesperson came out and said, oh, we're really not being investigated by the DOJ. And then this had a huge fat megalodon bar up. And then it gapped down anyways and continued to sell off. Then another report came out that said, oh no, this thing, that thing they're paying people, whatever. Again, you can't even follow it all. So don't even worry about it. You're rating the gap and making the decision. But again, I can watch a stock or pretend this was the market here in the morning. I can see it. I can see it. I can just see it. I'm looking at the candlesticks. Again, one is technical analysis, looking at past price data to predict future price data, which you could do it here. You could do it on the daily. You could do it on the 1 minute. You can do it on any time frame. Okay? Like, you got to get good at chart reading. You know, if you really want to delve into it over the holiday weekend, if you're bored, you know, you can get a book on just a flat, regular book on candlesticks and technical analysis, just to get the basics. Again, you see my charts. I don't want to get too far off here. My charts are very clean. Very clean. I don't have any mumbo jumbo on here. The cleaner the chart, I can see what's happening really in the price. Like, again, I could trade and read the tape. Like, I could just read the numbers and see what's happening. Yesterday's close, today's open, see where we're at today now. That's something that not a lot of people could do and make trading decisions. But back in the day, that is how people traded before we had live chart data or instantaneous, you know, data like this. That is how people made decisions before we had this type of environment. So again, that's like not relying on any indicators at all. And that's kind of where you need to be. You know what I mean? And then you can really get good at reading price, whether it's panic buying or panic selling. So again, you must become an expert. Like, so I become an expert in reading gaps. I've become an expert in shorting and fast trade specifically. In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Reading this is a skill. This skill can be acquired through education. And so education is very important. When people start to trade, if they take a class and they lose money, then they kind of get down on classes. And then if they start to take various classes, they even get down on it more. You might go through 100 classes till you find a system and a strategy and a mentor that you connect with. That's, again, it's the luck of the draw. Just because you find one thing that doesn't work doesn't mean nothing works. It's just going through the process of getting to the right people, which sometimes takes time. And it takes trusting yourself, knowing yourself. You know, like, again, anything you do, like I live in New York, there's a million different hairdressers in New York. There's probably more bad ones than good ones, just like trading educational places. But you take a chance. It's like either I cut my own hair or I go to somebody till I find somebody good. Actually, I had a hairdresser that was in New York for a long time. Then COVID hit. He left. He went out to Westchester. Well, I'm not driving to Westchester to get my hair done. So it literally, I'm not even making this up, took me until just like March that I found a good hairdresser. Like, so it was like 10 years. Like, the guy left like 2018 or 2019. Like almost 10 years, like seven years, like to find the person that I found now. And the only reason I even found him was because I went to so many different people and they had a horrible haircut at the beginning of March. I said, I have to find somebody to fix this. And I found this guy and he was really great and I loved him. But since 2018, I've been trying to find a good hairdresser, paying ridiculous amounts of money to go to places. In New York, you wouldn't even believe if I told you what I paid for a haircut here. And it's like, I didn't stop trying to find somebody good. And then, like, I did. So that's like trading. That's like trading systems. That's like trading mentors. That's like trading classes. You got to keep going after it till you find somebody good, till you find a good system, till you find somebody that you connect with that's a mentor. You don't want to give up. I mean, the other choice is giving up. You know, like I said, I could have cut my own hair. So it's anything in life, anything that you're trying to do where you have to hire someone for help. Whether you're paying them for service, like to paint your apartment or do lawn work, anything, you're going to find good ones and you're going to find bad ones. That's just part of life. Anyways, trading education is very important. Far too often traders don't understand exactly how important it is, but it is important. And especially in this type of market, it is okay to ask for help though. And it's okay to say, I don't know. I don't understand what you're talking about. I don't know what you mean. It's okay to say, you're losing money. You feel really down. It's okay. It's okay to admit all those things. It's okay to admit what you're doing is not working. In fact, I'd rather hear someone say what I'm doing isn't working. Instead, sometimes I talk to people and they try to tell me that what they're doing is working. And I'm thinking, okay, what you're doing is not working, or you wouldn't be talking to me. Don't lie. Just look in the mirror and say, this stinks. Got to do something else. I can't go on like this anymore. Because that's really where you got to get to that point where then you're like, something shifts. And you say, I'm going to do something different. I'm going to learn something different. I'm going to spend the money and learn a whole new system. I'm going to stop doing this thing that hasn't worked for the last umpteen years or months or weeks. I'm going to stop losing. Because if you continue the same actions and you're losing, you will keep losing. And you're just going to dig yourself a deeper and deeper and deeper hole. So you can change is my point. And it's okay to say, that you're not doing good. It doesn't mean it's anything to do particular with you. It just means the system that you're using doesn't work. And the sooner you come to terms with reality, if you're losing money, that you don't know what you're doing, that you need help, and then that you need a mentor, you need a new system, both probably, the faster you can turn it around, and then you can turn it around and turn it around quickly. You know what I mean? So that's the best thing to do. James is agreeing. Yeah, he's been trying to train since 2008. Well, that's a long time too. So again, what if I get up in the morning and I don't see any gaps? Well, then I don't do anything that day. Again, it's getting into the holiday. I don't know. Friday might be dead. I don't know what Friday morning is, but Friday could be dead. Day before the holiday, a lot of people go on vacation for Memorial Day weekend, take time off the long weekend. But if I find something, I'm going to get up in the morning early and read it. Could be 6 a.m., could be 7 o'clock in the morning. Again, this ended up gapping down today. I showed you it was very early. Here was the trade we did on the 13th. Again, this is so crazy looking at this now compared to where the stock is today. This was less than 10 days ago. Stock closed here, gapped down, and we shorted it. This was a day trade. 336.95, boom, dropped 327.55. This was a good trade. Again, this kept going. Okay, I did not hold this all the way down, very similar to the 515 trade, but I did stay with the option. I was on the option. Remember, this is the one I said I called the 540s. You could have done a lower strike here. You definitely could have done a lower strike. But anyways, I did this trade, got in, got out, got the drop, done, boom. It came all the way down in here. I could have held it for another, at least $7. But I was already out. Again, day trades, I like to be out fast. Options, I will give a little more time, wiggle and jiggle. It doesn't mean I won't get out the day I do it if it has a big move. You have to weigh that with the cost of it. Coach is asking me about the cost of this position. Let's be exact. So when I'm saying I'm day trading, I'm taking trades on margin. I said that earlier, you have to have a margin account. The exact cost of this position with 800 shares was buying power. That's not cash. So let's talk about it. $269,560. That doesn't mean you needed that much cash, Coach. Do you understand that? So when I'm saying margin, that means you have a margin account at a broker. Say, for example, you have a margin account at Schwab. I talk on Schwab's TV channel. You would have needed $67,390 in an account, for example, at Schwab to take this position. If you didn't have that, you could have bought the put. I did the put. I showed you the put. The put cost $14 for one. So obviously the put was less expensive. I did both. But do not confuse buying power with cash, okay? Because you didn't need $269,000 and change cash to take this. Let me know you understand that, Coach. Now, there are prop places out there that give you 10-to-1 margin. I don't trade at a place like that. I trade at a retail firm. But if you have a retail account that gives you 10-to-1, then you could have done this with like 26,000 and change. Okay. And actually made, 30% of your money. Could have made $7,500 if you were at a prop account with this on 10-to-1 margin. So again, I don't want to get too off topic here. We got to keep going. But the reality is that every single type of person here, if you're going to trade on margin, you should know what it is. If you're trading at all, you should understand margin and the difference between margin and buying power. And if I'm in and out of a trade in 5 minutes, 10 minutes, 15 minutes, that does not mean that the entire amount of the margin that I'm borrowing is at risk. Do you understand that? How many stocks do I scan in the morning? I don't scan thousands. If I'm scanning more than 100 stocks, there's nothing to do, probably. Like, if I have to scan for like longer than an hour, it's like a nothing burger day, basically. Anyways, I think I only have 10 more minutes here, so I might have to skip through some of this. But again, how can you become successful trading? Number one, you need a winning strategy, learn first. Number two, you need a supportive mentor, do and follow. I offer that for people. And then number three, become an expert in one thing, implement a winning mindset, trade daily with conviction and confidence. So it's extremely, extremely important to be confident in what you do. Am I confident in what I do? Yes. Why? I invented the system myself. So I know it better than anybody. That's number one. Number two, I'm running a trading room every day, talking to people live and trading myself. You have to be a confident person to do that. And I also appear on national TV. You have to be a confident person to do that. So I'm a confident person. If you're not that confident of a person, you definitely need a mentor. You need someone like me to say, this is good. This is fabulous. This is so, 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 so good. This rates really good people. And then I call it and you do it. Like, if you're not a person that has a lot of confidence, you need to gain the confidence by following a confident person like me, so that you're like, oh my God, I don't know if I should do this. This is down a lot. It's very expensive. Doo-ba-doo. Again, following a mentor that has a lot of confidence can really help you put the risk on. And I don't care if you're risking $500. It's $500 you could lose. So you need to feel like, and again, I say the word 100% conviction, you need to feel like it's going to work. Like every trade I take, I feel like it's going to work. I never take a trade and think it's not going to work. And I certainly don't feel like 50-50 crapshoot is good odds. Again, we already started talking about this, so I'm kind of skip through this. We talked about what a gap is. I'm looking for who's in control. Again, direction is key, because if you get the direction wrong, you're going to lose. If you get the direction right, you're going to win. And again, what will you learn from me? You're going to learn the 26 points. But 20 is a cutoff. I don't need 26. I don't need a perfect score. But this rating system is such a useful tool, because then I don't have to worry necessarily about the news. So again, the checklist tells you what to look for in the trade every day. This was the Apple one we did last Thursday. Last Thursday here, I entered this trade. This is a nice trade. Thursday, Friday, Monday, boom. I did the put here, got out yesterday, boom. And again, if you don't want to trade on margin, you could still be in this actually. We did the 210 puts, 280 I paid, sold at 6. It's a good trade. 114%, bing, bam, boom. I call right now, chunk it out. The market is in a tight range. Take a trade, book it. Take it, chunk it out. That's how you build up your account. And I don't care if you have a small account or a big account. You want to book money in trades. You're not holding them forever, Again, if you risked 11.20, here's a beginner risk for this. You could have made 12.80. Again, that's taking it Thursday. This is the put, getting out of it on Monday. But everything I'm looking for institutional money. Every time I take a trade, I'm trying to determine, is the institutional money buying a stock or are they selling a stock? Okay? And again, the benefit is that you can win big trading with this side of power, because institutions move stocks, hedge funds move stocks, big professional traders move stocks. And again, it's not like I'm living, and working down in Wall Street. I live in New York, but no one really hardly is down in Wall Street anymore. You don't have to be on the floor at the stock exchange to trade. You could be anywhere in the world and trade, and you could be anywhere in the world and make money. And there are so many actually funds that moved their offices even out of New York City down to Florida when COVID hit. So, I mean, you can see these moves. You can see things that are happening in the charts. you can see them in stocks, you can see them in the market. And again, you have to have live data. You have to have live data feed. You have to have good charts. So number one, you need a good strategy. Number two, you need a supportive mentor. I try to do the best to help people when they have questions. Again, I'm not going to abandon you after the class. I'm here. And if you're in the live room with me, you can ask questions every day. But the reason I like gaps is because they have big moves. Again, I'm taking what I consider an advanced trader size because I've been trading for a while. But again, you can take smaller size to use my system. You can open up an options account with $2,000. You know, I wouldn't risk more than $200 a trade if you're doing that. So it's like I've shown you the UNH because it's been on the news. It's been such a highly rated one. It was gapped down this morning, but there are many things we do that cost, like the Apple, $2, $3, a buck. We did one that was 80 cents the other week. So, I mean, there's not like everything we do is $14, and that I would consider that actually kind of expensive right now. I do options in the market. I'm in nothing with the market right now because I think it's crap. I think it's crap. My take on the market is that I still think we're lower. I'm not basing this on my system with the points. We gapped down today. I did not short the market. I'm not in any trades. Don't short the market today based on what I'm saying. I'm telling you with experience and knowledge and everything I know, I think the market's still lower. But I'm not in any trades right now because it may not sell off like a hot cake till, September 15th at this point. 100% conviction and no chance of failure. The market would have continued selling off if Trump had not paused tariffs. So again, someone talked him into doing that. He did it. And now every time Scott Besson, who's great, he's fabulous. He's like, couldn't be more fabulous. When he goes on TV and talks, the market just says, oh, everything's fine. Now, the one issue is that neither Trump nor Scott Besson can control the Fed. So if the Fed does something or says something, and they can't control the bond market either, then that could affect markets. Or if everything falls apart in the next month when the tariff pause is over, that could happen too. And there's also all kinds of wars going on overseas. So I'm not long the market right now, and I'm not short the market right now. I'm in nothing to do with the market right now, either way at all. So I do play the market, but I'm not right now because I think it's a waste. We're really not moving up, and we're really not selling off. Anyways, the rating system helps me determine who's in control. And again, it's about the bulls or the bears. I'm looking for institutional money. Are they buying the stock? Are they selling the stock? And I'm trying to find a trade every day that I can, trying to find a good one, looking for the quality. People come into my room every day and they want to see my picks and they follow the trades. And then they, base that off of that. Someone's asking about NVIDIA. I would do nothing with that right now. Earnings on NVIDIA, I think, are next week. So any option in that into next Friday is going to be crazy expensive into the earnings. That's number one. Number two, we're going into a 3-day weekend. NVIDIA will go with the market today, tomorrow, and Friday, and I would wait till the earnings on NVIDIA. So I have no opinion on NVIDIA right now because NVIDIA has earnings next week. They could bomb or it could gap up and make new highs. So because of earnings, getting into it, I think it's the 28th, I would leave that being. That's my opinion on that. So whatever I say today really doesn't have any meaning because the earnings are next week. So it's in an uptrend. It's true. We did a couple trades in that long. We did a couple calls in that in the last week, but that was not into the earnings week expiration. And I would just lay off that until after the 28th. Anyways, like I was saying, chunk it out in the live room, and then you want to become an expert, again, which is learning, understanding, trading, doing it, and becoming more consistent. And even if it's with small size, there's nothing wrong with taking small size. There's nothing wrong with taking one contract. There's nothing wrong with taking 100 shares. There's nothing wrong with, like I said, chunking it out. You could start with a small account and build it up. There's no shame in taking small size. But again, this is like taking 100 shares and trying to make $100. This isn't taking like 2,000 shares and trying to make $100. That's scalping to me. But the reason that I like to short is the idea of the panic. Because again, panic comes in very, very quickly in a stock, so we can get those kinds of big moves like we had in the UNH. But I think consistency helps. And if you think about it, it totally makes sense what I'm saying. Stocks fall faster than they rally. That momentum is key to making money, whether it's small size or big size. Following the institutional money is extremely important. Doing trades where you don't need the market at all is important right now too, when the market is in a range like it's been. And you can get chopped up. So again, you have to look for things that have nothing to do with the market conditions. So what will you learn in my class? You'll learn the 26 points, you'll learn the rating system, you'll learn the entries, you'll learn the exits, you'll learn the targets. I'm looking for a big move in the day, hopefully a morning entry. 1-to-1 is my goal, but some of the trades, like I showed you, are huge, and sometimes you just don't know. You don't know when a trade is going to go huge or not. It's not necessarily something that I plan out in advance. I rate it, it rates good, I take it, and then it goes. But again, like I was saying at the beginning, people go through this process. Don't give up. If your dream is to trade, you can do it. I have people that are with me for a long, long time. They know how to do it, but they like me doing the ratings, me, getting my mentorship in the room every day, and of course being there to call the trades, rate the gaps, answer any questions for them, and so on and so forth. So again, the system I use to find gaps each day is a 26-point checklist. It helps get you conviction, and understanding why something works will help you take risks, will help you trade better, will help you hold something longer. So empower yourself today. This is a complete system to use to trade. So the next class is in June. So it is a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. So the bearish class is $69.99, which is June 7th and 8th, 9 to 5. It's always Saturday and Sunday. It's online. It's a class on how to find, pick, and play professional bearish gaps. I am doing some Memorial Day packages going on through Memorial Day. If you know you want to sign up and you want to join and can start trading with us now, if you want to do the bearish class, it's June 7th and 8th. The bullish class, which I don't do all the time, but I am doing in June, is June 22nd and 23rd. Same price. Again, if you want to learn both, you can sign up for both and save. You can sign up for both and pay $99.99 and do the 2 classes, which is both Saturday and Sunday, 2 weekends in June. I'm not doing anything Father's Day weekend. And then if you sign up, the Memorial Day special is this. If you sign up for the Memorial Day special by Monday, Memorial Day, you will get the Wealth Manifestation course free, which is in July, and you will get all my subscriptions free through the end of 2025. So you will get all my options trades for the rest of the year, all my trading room trades for the rest of the year, and then the market report subscription through the rest of the year. And that's whether you do the bullish class, bearish class, or you do the combo for both. So it's a great special. I have people already signed up, they're already trading. And so again, you can get in, sign up today, get tomorrow's trade. I think that this has been an exciting year to trade. Some things have happened that were unexpected. To me, the most unexpected thing was, though, really the pause that Trump did, because he was so on top of this Liberation Day. But I think when the market sold off as hard as it did, people talked him into pausing. But what happens in June and July when the next 90 days is off, honestly, I have no idea. But I don't need to worry about it because I'm not in trades out till that long. I'm not in any trades out till June. We're doing the weekly options. So like I'm in trades now that expire next Friday. That's it. That's the longest I have out. And I only did them out to next week just because of the Memorial Day holiday. Or otherwise I would have done everything for this Friday. Any last minute questions from anyone about anything at all? How are we doing? The class, here, the Golden Gap course is $6,999, whether you do the bullish or the bearish. If you want to do both, you can sign up for both, which is a special, which is $99.99. If you want to sign up for the options newsletter separate, again, you can just go to my website. All of this is on the website. If you want to go to the website, it's here, thestockswoosh.com, or you can email me at melissa@thestockswoosh.com. The options newsletter subscription, I have a 6-month subscription for $49.99. That 6 months will take you not till the end of the year, but that's a pretty good period of time, 6 months. And for the 12 months for the option subscription, which would take you into May of 2026, is $6,999. And it's a lot of trades. This is the Memorial Day special here. If you sign up for one of the classes for Memorial Day, you get the options newsletter free through the end of 2025, the trading room free through the end of 2025, or the market report subscription free through the end of 2025, and the wealth class free. This is the Memorial Day sale. Any other questions? Be careful out there, people. I know people are doing all kinds of things. Be careful. Think about what you're doing before you risk money. Think about your trades. I don't care if it's a small amount or a big amount. You could sign up for the $49.99, which is just the options newsletter, James, It will get you 6 months of the subscription. If you go to the website, I list all of my prices on the site and all of the explanations for every class and subscription I have right on the website. Listen, happy Memorial Day, everyone. Relax. Don't think about the stock market or anything on Monday. Have good picnics. And you too, Fausto.
Melissa, same thing to you, and thanks for being